If you like my video, please subscribe to my channel and don't forget like video.
For the purposes of our forecast, we follow government policy. So for a major government policy, whether it's the stance of fiscal policy, or in this case, in the case of government policy, which is to remain a member of the European Union, those are used to condition our forecast. So it was followed in this case, yes.
In general elections, you do not give a view on opposition parties' economic policies. Why not?
Well, in general election, we observe the same convention, which is to follow government policy. In general elections, we have. Let me take a step back, if I may, and provide the overall context, which is based on the experience with inflation targeting. The adjustments to the remit, the Stockton report, which looked at how we forecast and how we could provide a richer sense of what our forecast is and how we could adjust policy for various shocks or uncertainties. We have a responsibility not just to provide, and we have done this consistently, not just to provide a base forecast, but to identify the biggest risk to those forecasts and give a sense of the dynamics around those risks and how it may affect, those risks manifest, may affect monetary policy. It helps understand the reaction function of the MPC. It makes monetary policy more effective. So there are a few examples of that. Labor supply shock, we looked at that in early 2015. We looked at risks around China late in 2015. And in this case, a discrete issue, which is membership or not of, so I'm coming to the answer to your question, a discrete issue, which is membership or not of the European Union, which has the potential to change the trade-off, and we can come to how that might be. In a general election, as you well know, parties have a myriad of policies. There are a wide range of possible outcomes. The timing of those policies coming into effect can vary substantially. And so there is not a discrete option, a discrete risk, positive or negative, that would be taken into account.
Is that really true, that if you get a change of government, you get a change in policy, and you get a change in market sentiment around it? That if we had gone a year ago to the Labour Party's economic policy, that would have been a clear, discrete event, a change of government, a new Chancellor of the Exchequer, with a clearly identified set of economic policies?
The precise constitution of a new government, in the last election, could have been another coalition government, could have been a different coalition government. The timing of certain policies coming in is an open question. I mean, this is your field. You know that actual policies don't always unfold in lockstep with a manifesto, and so it's too complex an alternative scenario to take into account.
This seems a very peculiar answer, because there's a great deal of complexity around whether or not we leave the European Union. The 2-year period in which to negotiate how we leave, the uncertainty as to what the outcomes will be, what trade arrangements we would have. I think you're taking exactly the same speculation as you would be on a general election, and that your answer so far is basically sophistry.
No, it's not. In this case, there are identifiable impacts of this question in certain financial asset prices, most notably in sterling. Our analysis and our decomposition of that is detailed in the report and is adjusted. There's identifiable impacts on commercial transactions. We see it most notably, for example, in commercial real estate, but we see it in confidence indicators. We see it in other, both business, consumer confidence, which have adjusted. So there are identifiable impacts that are consistent with the potential economic impacts of a decision to leave, the short-term economic impacts of a decision to leave the European Union. And those short-term economic impacts are relevant to the stance of monetary policy. And in order to make monetary policy more effective, it is important, it is useful to outline the potential effect on both growth and inflation, what drives that, the potentially offsetting effects, and what that might mean for the stance of policy.
There have certainly been specific occasions in the past when the opposition's economic policy would have had a profound effect on sterling. And yet you would ignore those.
It's Mr. Rees Mogg, the effect on sterling since November has been unusually.
No, I'm asking you.
No, I'm answering because the important thing is the unusually identifiable, and related to the referendum.
I'm asking you about a general election campaign in which, not that long ago, in both our lifetimes, a Labour Party was suggesting reimposing capital controls. That would have had a profound effect on the exchange rate. And yet you're saying the Bank of England would never make a judgment on those.
The point I've made is that in an election campaign, there is a myriad of policies and complexities and uncertainties about whether those policies are going to be put in place. And what is unusual about this situation is that there is one policy. There is a discrete question, which is membership or not of the European Union. It is having identifiable effects on asset markets and on the underlying economy. We have to take those effects into account to make a judgment about the underlying momentum in the economy and the pressures on inflation over the policy horizon in order to make a policy decision. Those were judgments we had to make in order to make that decision on May 12th. And we recognize individually and collectively that the decision in the referendum could change the monetary policy trade-off in a material fashion and therefore change the stance of policy. And it's important not just for those in financial markets to understand that, but it's important also to come straight with the British people about that. And that is what our remits require.
Well, I'm not convinced about that, but in the general election, commonly, though not admittedly the last election, there are usually two outcomes, Conservative or a Labour government historically. And there are a myriad of economic things that follow from potentially leaving, whether we have a Norway deal, a Switzerland deal, a Canadian deal, whether we have entirely free trade. All these issues are uncertain and unsettled. And I think your comparison is essentially false, that there's the same, usually binary outcome with a myriad of policies that follow from it, regardless of whether it's a general election. And this is where you seem to become very politicised. And if I may move on, what conversations have you had with the Chancellor of the Exchequer in relationship to our relationship with the European Union?
One point on your,
if you wish,
if I may. I think what should be recognized is that in any of those alternate trading relationships, there is likely to be some effect on the supply potential of the economy for a period of time. And as a consequence of that, it complicates the monetary policy trade-off. So there is a questions of degree, depending on which deal could be negotiated, but all of them over the relevant horizon of monetary policy. That uncertainty is likely to have an impact on supply. So it is relevant, and so that uncertainty,
exactly the same applies to a change of government. Exactly the same degree of uncertainty.
Well, I don't accept that. But your question.
But let's move on to your relationship with the Chancellor.
Yeah. Well, the conversations that I have had with the Chancellor with respect to the European Union include a series of conversations around issues we discussed when I last appeared here, around how does membership of the European Union affect the bank's ability to achieve its remits, monetary and financial stability. To grossly simplify it, I won't go into all the detail. In terms of monetary stability, ultimately we can achieve monetary stability, we can achieve the inflation target, whether or not we are a member of the European Union under any sort of arrangement, that's clear. In terms of financial stability, there is and we've talked at length about this, the sort of positive aspect. I think we have a slightly different view on this, but a positive aspect in terms of openness on dynamism in the economy, and the challenge or the negative aspect in terms of exposure to risks in the euro area. But importantly, it's a question of, do we have the tools to achieve financial stability, and how can we protect those necessary flexibilities? So a series of conversations, as you would expect, with the Chancellor about those issues in the run-up to the negotiation of the so-called new settlement agreement.
And subsequent
to those, subsequent and antecedent to those, but more intensively subsequent to those, about the economic implications. How is the economy doing, actually? I mean, of course, that is a regular ongoing conversation between any governor and any chancellor. And given that we are seeing manifest some aspects of uncertainty and those effects on the economy, certainly the chancellor is aware of our views on that. In terms of the potential economics of exit, yes, we've had conversations about that as well, as you would expect, and in fact, indeed, as I mandate under the remit of the Financial Policy Committee, if, as is the case, the Financial Policy Committee views the risks around the referendum as the biggest domestic risk, I am statutorily obliged to have conversations with the Chancellor around those risks, and I have done so.
Section 10 of the 98 Act amends Section 4.1 of the 1946 Act to give you independence in the field of monetary policy, but leaves the Treasury open to give you direction in other areas. How do you expect that direction to come?
In this day and age, one would expect that direction to come in a written form.
You would expect?
I would demand. Well, it would. Let me put it this way: if I as governor, would demand.
You would not accept informal.
I would not accept informal direction. No.
And has there been?
And if I may, if I may, these issues of direction. If direction is to override a policy view of any of the committees, then that is a well. It has to. One would expect it to be written, and one would expect it to be public.
In terms of the information coming out of the bank and the Treasury, has the Treasury known in advance of your publications?
No. Well, here's what the Treasury knows every time we have an inflation report, or for that matter, every monetary policy decision. There is a Treasury observer, as you know, on the Monetary Policy Committee. We have a written protocol with the Treasury that Treasury observer, who is normally the second permanent secretary or that stature, can brief two people, the Chancellor, obviously, and if it's not the permanent secretary of the Treasury, in confidence. So that's understood. So the Chancellor will know, if he or she chooses, the decision, the likely decision, and the substance of that decision. When we are below or above 1% below or above the inflation target, as you know, on a quarterly basis, the governor writes a letter to the Chancellor, as was the case in the most recent quarter. So that letter, there's an exchange of letters, and so the Chancellor gets the letter, which is in the public domain, draft of the letter in the public domain, and then responds to it. So that is provided. That is the sum total of what is provided to the Treasury. So they don't see a draft of the inflation report, and obviously they don't see the minutes because we write the minutes and then put them out.
In your discussions with the Chancellor about the whole issue relating to remain or leave, have you kept minutes of those meetings?
No.
Or telephone calls? Do you have notes? Are notes kept by your team or the Treasury team that you're aware of?
We would. I mean, the conversations. I don't think I've had a telephone conversation with the Chancellor on these issues.
And do they know other officials in those meetings?
There are other officials, and I mean, I'm sure we have minutes. Yes.
And would there be a possibility of publishing this so that we can see?
It is, I mean, it's not the norm to publish those minutes.
This is highly politically sensitive, and to see that there has not been undue influence coming from the Treasury.
Well, I mean, there's no possibility of undue influence coming from the Treasury. I've appointed for one term.
Well, there's always a possibility.
There is no possibility of undue influence. There's no possibility of effective influence, even if it had been tried.
But it's very convenient that you are giving out exactly the same propaganda as the Chancellor.
I don't accept that at all. I don't accept that at all. The economics, the judgment, Mr. Rees Mogg, the judgment in the monetary policy summary, in the minutes, in the letter to the Chancellor, in the inflation report, those judgments around the risks around the referendum, both actual that are manifesting in the economy today and prospective in the event of a vote to leave, those are the judgments of individually and collectively the 9 independent members of the Monetary Policy Committee.
In a deeply political area where you would not in a general election give a view, where you've gone away from the normal independence of the Bank
This is
of
not
England.
a general election, Mr. Rees Mogg.
Well, I'm aware of that, but it's still a popular vote across the country. It's,
It's
as the Prime Minister has said, it's more important than a general election.
Mr. Rees Mogg,
change our mind every 5 years.
we have a responsibility both to discharge our remit, and we have a broader responsibility to the British people who don't want risks kept from them, hidden from them. They expect us to come straight with them about issues, and they expect us to take action to the extent possible to mitigate those risks, and that's entirely right.
Don't you have a responsibility to be apolitical?
We are apolitical.
As soon as you become political and you support one side in a campaign, why should anyone now trust you to set interest rates
We have
other
not,
than for the benefit of the government?
Mr. Rees Mogg, we have not supported a side in the campaign. The only side we have supported is the pursuit of low, stable, and predictable inflation, which is our remit.
You have effectively...
And we have made, and by our actions, by our commentary, which may be inconvenient for you, but by our actions, we have made it more likely that we will bring inflation back to target, whatever the outcome of the referendum, sooner and more sustainably, and that will be a better economic outcome. That's our contribution to better economic outcome for the British people. And to suggest otherwise is to try to undermine that.
I do suggest otherwise. I think
and so you try to undermine that.
I think you have become politically involved in a way you have quite clearly said you would not in a general election. You've given, Jeremy Corbyn made an important speech on economics a few days ago. The MPC has not given a view on whether his new economics is a good idea or a bad idea, and I assume won't.
To that at all?
I don't think it's worth a reply.
Okay. Have you anything else you want to ask?
Yes, I just want to ask one thing. Is it the case that you agreed to speak to wavering MPs about how they should
no, it's
go
not.
in this kind of
No,
is that not correct?
That is not correct.
That was reported to me. I just want to finish on the opening point and the damage this does to the Bank of England's reputation, because the Bank of England has had a very high reputation since it got independence to set interest rates on the basis that depoliticising it would mean that it was not set for the electoral cycle. By getting involved in the details of something that is actually more fundamental than an election campaign, that fundamentally undermines the standing of the Bank of England and its appearance of independence, and it appears as if the Bank of England has become the creature of the government.
What you've missed in that is that there is an issue which has an impact, is having an impact on the economy, has a prospective impact on the economy in a way that affects our ability to discharge our remit. We are obliged. It is political to ignore it. It is political to take a decision to not disclose. If we are changing policy, as the Bank of England has, we have changed our liquidity policy, we have changed our supervisory policy, we might have to change our monetary policy in pursuit of our remit. We have an obligation to disclose that.
All of that applies to the economic policies of an opposition parties, but that is...
I can't think of a case, Mr. Rees Mogg, where the Bank of England has changed any of those policies in advance of a general election, and yet we are in that circumstance with respect to this vote, and that is what you've missed.
What these exchanges are illustrating is the fault line on which the bank has sat since independence, since '97, with respect to a whole heap of potentially controversial and highly political issues.